Hello, everybody, and welcome to IC Markets Market Commentary. My name is Tamar Mehr from Trade with Precision. Now, on Friday, we had PCE Price Index, and that surprised the market. So it has unexpectedly accelerated in January. And since this is the Federal Reserve preferred inflation gauge, market has reacted. So we saw equity markets selling off and we saw the US dollar rising. So today I want to take a look at a couple of US dollar crosses, and I want to start with my favorite at the moment, and that is dollar yen. So this is the monthly chart, and on the monthly chart we can see we have very nice uptrend. We were very overextended. You can see we rose up here into the area of around 152, and we were simply pulling back into the averages. So that sell-off, that weakening in the US dollar in the contents of the monthly could be simply a pullback into the averages, into that area between the 10 and the 20 moving averages. Now we can also see on the momentum indicator, especially on the MACD, a very nice rise on this uptrend. Moving averages are fanning and in the correct order, and it's a very nice space in between them. What I also like about the movement on this monthly chart is that if we'll take a look at this low, and let's get precise, the low here is 126.36. And if we'll take a look where the market has stopped after this sharp pullback, what we can see is that the low was actually higher. So we got to 127.22. So that could be interpreted as a bullish sign. Now, what we also have for this month is that we went ahead and broke the high of the previously printed indecision candle. So once again, another bullish sign. So if I'll jump straight into the daily chart, what we can spot on the daily that we were in a downtrend as the higher time frame were pulling back, and now the daily has started to change direction into an uptrend. And we also have the moving averages 10, 20, 50 in the correct order for an uptrend. And we do have agreement as well from the momentum indicators. Now, the next strong level of resistance sits pretty close to where we are right now, around the 138. We can see plenty of touches at that area in the past. So what I'm looking for from this market, there's a couple of elements that I like to see. So the first thing, there could be some simple pullback on the way up, so short pullback in the context of the lower time frame. So say, for example, in the context of the 4 hours, pulling back into the area of the previous swing high, so around the 135.3, bullish candle in the buy zone and a continuation of this move. But since we moved quite high, what I also wouldn't mind seeing is a little bit more of a deeper pullback, and that could be all the way down to the 134. We can see that was the origin of the latest push to a higher high. However, if the market will keep on going from here, then what I'd like to see is first a break of the 138 and then a pullback to test it from above, because if the market might fail shy of this 138, that might mean that we are looking at a deeper pullback. So that's my plan for dollar yen. The next one is Aussie dollar, and Aussie dollar on the monthly chart, as we can see, we are still in a downtrend. However, what's interesting about this market again is that if we look at where we stop, if you look at the high of this candle, that was 71,368. If we look at this one, we ended up at 71,579. So we went slightly higher before pushing lower. So that could mean that the buyers are not done. However, so far for the month of February, which is going to close in 2 days, we have a nice bearish candle sitting here in the sell zone. If we jump into the daily chart, what we can spot is that on the daily chart, we have changed into a downtrend. We're coming into this very busy level, and this level actually was the origin of the move that went to this higher high. So I do expect some buyers to be in and around that area. Now, once again, we could have a shallow pullback into the area of the 68.11, so this previous touch here on the way down, but I'd love to see a deeper pullback, and that is a little bit higher into the area of the 68.80. So this is the origin of the move from here. This was the previous swing high, previous swing low. We had a bit of consolidation around that area, so quite a significant level on this market. The last one is euro dollar. Now, euro dollar, again, on the monthly, what we can see here is we have a bearish candle in the sell zone. However, it's the same caveat sitting here as well. Even though this is a very nice level, we can see that we actually traded above it, and we also went above this area right here. So above this little swing high here on the way down. So that again could tell us that the buyer might not be done. So looking at the daily chart, once again, I'd like to see a slightly deeper pullback. I'd love to see a pullback in and around the 1.07. So that would bring us closer here to this sideways action that we had around here before the break. We could, of course, see a small pullback into the 106, and that could be the next push toward the 105. You can see that's the next important level on this market. Is again the origin of the move that went to a higher high. So again, a couple of options on this market. I'd prefer a deeper pullback and then a rollover and a test of that 105. But even on lower time frame, a pullback into this 106 and a continuation might also present a nice opportunity. In any case, we have to keep in mind that this might be an area where we see some more buying coming into the market. So whenever a setup may present, needs to have enough room to move before it hits another wall, meaning another level of support and resistance. Happy trading, everyone, and I'll speak to you soon. Bye for now.